Hey traders! This is how smart traders trade.
So I'm looking for price to come into this area of imbalance. Once price gets into this area of imbalance, we're going to look for potential sell opportunities. I like this area because if we measure the range from the expansion that was created, that is in and around the 71% level, which I personally like. It's also inside this box here, which is your premium level. Now you might be thinking, why am I not using this entire range? There's a couple of reasons. One, the expansion started from this area here. Price retraced a little bit higher and then expanded to the downside. Two, I'm using a 3-candle formation to actually work out the bottom and top of my trading ranges. So how that essentially looks is if you get 3 candles, the middle wick has to be higher than the 2 wicks either side of it. So you've got 1, 2, 3 candle formations, which in turn make a high, and the opposite side would make a low. Now, as you can see, price is inside our point of interest area. If we go to a smaller time frame, you can see within this area of interest, we've created another area of sell side imbalance. As you can see, price tapped into the entry, targeting sell side liquidity. These are opportunities you can find in the market as long as you are being patient and you're waiting for the highest quality setups. They might not come every day, but if you are observant within the market and you actually wait, you practice discipline, you practice patience, you will be able to find opportunities like this and benefit from them.
So here is the questions you should ask yourself as a trader. 1. Why do they wait for price to reach the area of imbalance? What is this imbalance in Forex? B. How do I spot this imbalance in my charts? C. Why is this imbalance important? Please traders, let me explain this in depth. 1. What is this imbalance in Forex? In trading, an imbalance refers to a situation whereby orders significantly outnumber sell orders, or vice versa, leading to potential shifts in asset prices. This disproportion indicates strong market sentiment towards either buying or selling, impacting price movement direction. 2. How do I spot this imbalance in my charts? Imbalance consists of 3 candles. The second candle is an impulse in any direction. The first and the third candles create the border of the imbalance. The imbalance has formed after the third candle closes. The imbalance is located between the first candle's highest point and the third candle's lowest point, bullish imbalance. All 3 black rectangles on the chart here are bearish imbalances. It's a space between the first candle's lowest point and the third candle's highest point. It's part of the middle candle that isn't touched by the neighboring candles. We consider the imbalance strong when the price collected liquidity above the recent highs or below the recent lows before creating an imbalance. 3. Why is this imbalance important in Forex? Imbalance is a type of trading opportunity for intraday and swing traders. In trading, imbalance is used to identify zones of interest. The zone from which the imbalance originated is characterized by a higher level of probability. The zone is suitable for analyzing and identifying entry points. Entry points are selected with the help of technical analysis within the selected trading methodology. In this case, imbalances acts as an additional factor. Most imbalances represent price inefficiencies. Therefore, there is a high probability that the market will come back to fill the imbalances. For example, if a large bidder manipulated the market, a correction occurs afterward. Typically, price tends to mitigate the imbalance or the area from which it originated. Therefore, traders trade in the direction of the imbalance to profit from the price movement. However, sometimes price continues to push back against imbalances that are forming in the market. With that, I know you have answer as to why they wait for imbalances when they want to take trades. Question number 2. What do they refer to premium level? Where can I get on chart? What do this premium level mean? Well, they use the Fibonacci retracement tool to know the premium and the discount zones. What do they refer to premium level? Premium and discount zones in trading are broad price areas derived from the previous momentum using a modified Fibonacci retracement. These areas give us a guide. Premium market, on a downtrend, is a favorable area to sell or open a short position. Discount market, on an uptrend, is a favorable zone for buying on the spot or opening long positions on the margin. To determine the premium and discount market zones, you need to use the Fibonacci retracement tool. In the settings you can leave only levels 1, 0.5 and 0. As an option, Fibo can be left standard with all levels, just emphasize the 0.5 level. Fibonacci levels should be applied to the entire previous impulse, from the first swing, the beginning of the impulse movement, and up to the swing where the impulse ends and the correction begins. Anything below the 0.5 Fibonacci level is a discount market zone. If the momentum is upward, then this is the most favorable range to consider long positions. Everything above 0.5 Fibonacci level is the premium market zone. In this zone it is logical to consider only selling. Accordingly, if the momentum is downward, then this is the most favorable zone for opening short positions. You should also realize that if the trend is upward, then even if the price is in the premium market, it does not mean that you should open short positions. If you have long positions, then you should make a partial fixation there. If the trend is downward, then you should consider short positions in the premium market. The level of 0.5, the middle, is also called as a level of fair price or equilibrium. The market can be considered locally on any time frame on which you open trades from the point of view of expensive/cheap. It is the middle of this range that will be the conditionally fair price. Total, if the trend is upward, we should consider any long positions only in the discount zone. If the trend is downward, we should consider short positions only in the premium zone. The Fibonacci retracement tool for determining the premium and discount zones does not give us an entry point. It is only a guide, a wide zone where it is profitable to buy or sell an asset. To determine the entry point, you need to focus on other tools of the smart money concept: OT zone, imbalance, order block, etc. I have talked a lot about this. Watch them on my previous videos. So, that's all you are supposed to know: a Fibonacci retracement tool to know the premium and the discount zones. These are the things I found a bit challenging to understand, especially to a beginner. Please ensure you take note of it. The video talks about other things like the 3-candle formation, which is perfectly explained. Now, with the understanding of all this, watch that video again and you are going to flow. This brings us to the end of this video. Don't forget to subscribe, like and share. I will see you in my next video. Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your Forex account because you will not like the results. This book will introduce you to another side of Forex trading because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only and it will save you from a lot rather than paying for
Now,
those so-called
if you want to kick
Forex
off your
mentorship.
Forex
journey, WhatsApp this number to order your copy. First come, first serve.